To focus and once again talk about the fundamentals in the market right now. So much to chat about. We have Mr. Sanjay Parekh, the founder and CIO of Sohum Asset Managers, joining us on the show. Sanjay, hi, good afternoon, and thank you so much for your time. Now, I remember last time we interacted, one thing really stood out to me, and that is the house strategy at Sohum, growth at a reasonable price. Do you believe markets are giving that reasonable price option to investors right now, or any pockets where you think the prices have become reasonable, given that we've been stuck in the same range for quite some time now?
Yeah, so good afternoon. So it's actually healthy, if at times earnings are slowly towards recovery, the downgrades have slowed down, and if there is a time correction, it's actually quite healthy as we think about it. Now we're transiting to next year, 26, 27, and then people look at 27, 28 as well. So, with a 12 to 15 month horizon, wherein 27, 28 would come in, we will slowly and surely get reasonable. So if you take earnings this year will be flat, I mean, minor growth of 10% at 1100. Next year should be more like 1300, and then 27, 28, as we believe, around 14, 15. So we believe if we give 20 times, which we think we deserve, that's 29,000, which is more like 11% from the current levels. But the key point is earnings recovery, which should be visible in Q3. And we believe that's definitely Q3 should look better than Q2. But it's important to see the magnitude of revival in the earnings.
Okay, so that's going to be a significant trigger to watch out for the market going ahead. But also talk to us about the portfolio construct right now. Sanjay, are you more tilted or skewed towards the large caps right now, given that we have seen a lot of range bound action? On the flip side, there is so much volatility in the broader end of the market. So, where is the portfolio bias at the moment?
Right. So, we always look at volatility as a friend. It actually gives us a lot of opportunities. Our work and the product construct is that at least 70% always will be large cap. And we go to mid and small cap if we see them big divergence in valuation, ideally much higher than larger caps. If not, then we'll be more into larger caps. So that's worked well for us. So with that construct, I believe, there are definitely few opportunities even in the larger cap space, with a 15-month horizon. And of course, then a longer term as well. And then in mid cap, small cap, where we are very selective, we are meeting companies, we are watching in different space. Some of them you've liked, but valuations are still not to the level we want to be buying them. So we believe that in this next fall, if there is any, on a bottom-up basis, small and mid-cap will throw opportunities. It's just to keep the discipline of higher price value gap. That is what we are doing. And in the larger cap, we are tilted towards more domestic discretionary financials, NBFCs, capital goods, cement we are neutral, and then logistics and telecom. So these are utilities. So these are our overweight bets. So broadly, it's domestic overweight, global underweight. And we stick to that theme, and we continue to be in that framework for now.
Sanjay, do you think increasingly the bottom-up stories wherein there is slight bit of valuation comfort are ones which are going to work well? I mean, clearly we are seeing that play out with IT, for instance.
Yeah. So, I mean, broadly in mid and small cap, at least, I believe, uh, there are opportunities which are definitely coming up where the opportunity size is very large. In IT, we are underweight, so we believe AI is clearly a threat to growth, long-term growth. There will be cost savings as well, and benefits of AI-led services, but the eventual contraction in IT services will be there. So the growth rate will be really, muted is what we believe. And it's not about this year. We're talking of next 3 years. And hence the valuations are rich. It's not really cheap. So we are underweight on IT. And, we genuinely believe if you take the last 3 year growth rates, they've also been weak when AI was not so prevalent. And now in the next 3 years, when we see them, it's tough to assume more than 5-6% on a compounding basis. And for that to pay 20, 22 times, it's still not that cheap. So we would continue to remain underweight on IT.
Okay, and Sanjay, we need to, of course, address the kind of run up that we've seen in some of the precious metals, and because of that, some of the underlying stocks, Hindustan Copper, Hindustan Zinc, to name a few, they have also seen significant run up. Are you bullish on Nifty Metal even going ahead, given that it's already seen such a spike in the year gone by?
Right. So, I'll be very honest, taking a view on precious metal is a very tough task at the current level. But we always had Vedanta, which we liked, and we've been holding it for now little less than 2 years, more than that actually. So, that has worked well for us. It's a proxy to, zinc, aluminum, silver. Silver is a very big beneficiary. But as I said, it's very tough to take a call of what will happen to silver or gold from the current levels. But these companies are big beneficiaries of the firm prices. But non-ferrous, we believe, clearly are in better space because you don't have a problem of dumping from China, and each of them, aluminum also would have a lot of applications coming up on the demand side globally. The supply side response is limited, so there as well, things should look be good. And then zinc also, the outlook is promising. So with that, we like Vedanta. We are holding it. But slowly, we would not, just because silver is going up, and start adding up. That's not the strategy we have. We would hold it for a longer term time frame, because there will be a demerger, but that will also unlock value. So we think there's still potential, and we want to hold on, and we hold Vedanta right now in our portfolio.
Sanjay, increasingly one is seeing manufacturing come back to the fore, and one is seeing that play out across the board, be it some of the order wins for NBCC, some of the railway companies, and of course defense is clearly back in the fore as well. Anything that you're liking within these pockets?
Yeah, so we like the capital good theme. I mean, it has worked in select pockets, not in all pockets. So we have a prefab company, Interact, which has worked very well for us. And, I mean, they are on a very strong order book, growing sustainably at very good rates. And the opportunity size is pretty large in that segment, moving from unorganized to organized, and the need to speed up, the plans. And there are very clear, large players there. And then we have, of course, Larsen to Grow, which is a large play on domestic and global spend, and it's again worked well for us. And then we have an EPC company, the Wilcon, which has a play on EPC, the coal MDO contracts that it has, very large contract. And then it also has an element of InvIT, which they can monetize. So the sum of part is really comfortable. It's not worked in the last 1 year. And now the order flows have also started. So we like on a bottom-up basis, capital goods theme. We even in the transmission segment, we are looking closely. There could be some of them in the transformer segment. So we're watching that space closely, but there are clearly opportunities coming up. The only caveat for us is to be that they have to be reasonably priced. So once they get to a reasonable pricing, we will look to add in that space.
Okay, interesting take. Sanjay, thank you for your time on this. On that note, we'll let you go. Wishing you and your team a very
Thank
happy
you.
new year.
Same to you and your viewers. Have
Thank
a
you
great
so much. Okay, well, viewers, on that note, we'll slip into a very short break, just checking in on whether there's been any improvement in the Nifty. None at all. In fact, we're right there around that 25,950 mark. Still continue to be 0.3% lower. But we'll be right back on the other side with more news and, of course, lots to talk about the market session today. So stay tuned.